So renewables investment companies like TRIG, they sit at the overlap, the nexus between, I suppose, the mega trend that is energy transition, whether that's for reasons of energy security or decarbonization, and investors' desire for resilient inflation-correlated returns from a combination of progressive income as well as capital growth. And the inflation correlation piece of that is particularly important in this environment, in an increasingly protectionist world, which can create inflationary pressures. Now, the sentiment towards the UK as well as the green agenda has weighed on the share price. But in this session, we'll cover how TRIG's underlying balance sheet and performance has been healthy and robust. And today's share price implies annualized returns of 12% going forward, as well as a covered dividend yield of 10%. Now, TRIG offers a liquid investment into renewables, and it leverages the expert management team of InfraRed Capital Partners, the investment manager, and RES, the operations manager. Now, our management team across InfraRed and RES is about 30 people, and we're able to draw on the wider organizations as needed. Having RES alongside us as operations manager is a real USP for TRIG. It's not often that you have two managers in this space. RES has been in renewables for over 40 years. They were effectively the founding fathers of renewables, and they have over 4,500 people globally, which means we can draw on experts, whether that's engineers, meteorologists, machine learning experts, and so on, to drive value for shareholders. Now, TRIG's portfolio is diversified across 3 mature technologies, which each have a proven return profile. The wind and solar assets generate electricity. They are paid for this generation either through fixed price arrangements, either with governments or corporates, or on a merchant basis, i.e. they sell their power in the open market. We also have flexible capacity assets such as batteries, and these respond to price signals, so they're complementary to the generating assets. They make money by buying low, selling high, smoothing the volatility of renewables generation. Now, how do we make the most of owning these assets beyond their inherent characteristics? That is through active management. And these are the 3 pillars that we use to drive value. Firstly, the portfolio profile. It's about the shape of the portfolio. So this is not only about managing risk through diversification by geography, by technology, by revenue, by counterparty, and so on. It's also about the new investments that we make, as well as the willingness to sell investments when the time is right. Development and construction, that draws on the core strengths of InfraRed and RES to create new renewables and storage capacity, and in doing so, access attractive investment pipeline as well as attractive higher returns. And then value enhancements. This is all about getting more out of the assets that we already have through increasing energy yield, reducing costs, and improving operations. And over the next few slides, I'll go into each of these in more detail. So let's start with portfolio profile. Our portfolio split geographically is about 60-40 UK, rest of Europe. And that really reflects the fact that the UK has led the way in Europe in renewables deployment. And we expect this ratio to remain broadly thereabouts going forward. The portfolio is 80% wind, 14% solar, 6% battery storage. And this is an area we expect to evolve over the coming years as we seek to introduce more solar and batteries into our portfolio, and we have been selling wind assets to further improve the portfolio's balance. Over the past 2 years, we've sold about 8% of our portfolio for £210 million at an average 11% premium to carrying value. This directly flows into the NAV, and this return of capital has enabled us to triple our share buyback program to £150 million, as well as double its pace. At the current share price, we see buybacks as an attractive investment. They set a return hurdle for us when thinking about new investments. Albeit, we are seeing investments coming through, particularly in our organic pipeline, that beat the return hurdle set by buybacks. Typically, these new development and construction projects having investment IRRs of double digits. And they include an exciting investment we made about a year ago into a company called Fig Power. That's 10 people based out of Bristol, a team that is developing and will ultimately build a battery storage pipeline. Now, development and construction is a key growth lever for the portfolio. As I say, it leverages the core strengths of InfraRed and RES. Since IPO, in the context of a 2.7 gigawatt portfolio, we have built 650 megawatts ourselves. That's nearly a quarter of the portfolio. We've spent over £250 million on construction and development in the past 3 years. And you can see some examples on this slide, with the Ryton battery project due to come online later this year. And looking forward, the Spennymoor and Cooksack opportunities coming up for final investment decision. Looking forward, we have a 1 gigawatt development pipeline that we're looking to bring forward into construction by 2030. That's about 600 to 800 million pounds of capex. Crucially, our strong balance sheet means that we have the ability to fund this construction entirely from our own resources without needing to return to equity markets or to necessarily sell assets. This stems from a combination of retained cash in excess of the dividend, as well as debt capacity. So the next projects coming up is a repowering in France called Cooksack. That's where we'll take down the old turbines, we'll put up new kit. Here we've doubled the site capacity, currently 12 megawatts. When we rebuild it, it will be 25 megawatts. And we've secured a new 20-year inflation-linked feed-in tariff with the French government. So we'll start decommissioning that site later this year. And again, double-digit returns expected from this investment. And finally, it's not all about the new elements that we're adding to the portfolio. We also seek to maximize the value of what we have. Here we benefit from RES's capabilities to make our assets work harder, be the best that they can be. And this encompasses both increasing energy yield, i.e. how much electricity we produce, and optimizing operations. And there's some super exciting developments here. The team at RES are working with companies that work in the Formula One industry to bring leading aerodynamics from that sector to wind turbines to maximize the aerodynamic efficiency. They also use machine learning experts so that rather than each turbine maximizing its individual output, the turbines in a wind farm talk to one another so that they act as a collective and maximize the output of the site as a whole. So some really exciting innovation coming through here. And finally, before I conclude, we are acutely aware of shareholders' focus on capital allocation. We have been speaking about this topic consistently for the last 2 or 3 years, and our approach has been balance sheet first. We think a secure, robust balance sheet is the foundation of long-term success. And to that end, we have reduced debt by over £500 million over the last 2 years. Meanwhile, we've also increased the dividend by over 10% since 2022. The dividend is covered, and we also started a share buyback program last summer, which alongside the results that we announced in February, we tripled the size of to £150 million. This robust balance sheet means that this year we are pivoting our allocation to put an even greater emphasis on shareholder returns. This includes the tripling of the share buyback program. Shareholder returns are expected to be nearly half of our operational cash flows and proceeds of disposals this year. And our approach to capital allocation means that we can reduce gearing, increase shareholder returns, and fund accretive growth concurrently. So just to bring this short presentation together, TRIG's proposition is founded on 4 pillars. Firstly, the expert management team of InfraRed and RES combines 25 years infrastructure investment pedigree with 40 years of operational excellence. The scale of TRIG, 1.8 billion market capitalization, means we can effectively diversify the portfolio across markets, as well as taking attractive, high-return positions whilst managing concentration risk. Our strategy, which we've outlined today, is a total return strategy, combining the current 10% dividend yield with opportunities for capital growth. And most importantly, a robust balance sheet with modest gearing and little interest rate or refinancing risk. So standing back, we are really excited about the energy transition, the investment opportunity it presents. Thank you for joining this presentation today. Thank you for listening. I'll be at stand M9 the whole day if people have questions. Thank you for your time.